in the month of July, we've got three things to talk about. The first is Ethereum. So Ethereum is not Bitcoin. It doesn't get as much traction as Bitcoin, but it's kind of a subcoin. And so on the year, it's up a little bit. But in just last month, it was up over 40%, which is a massive sign of what's going on. A lot of institutional, so big, again, pension funds, big companies buying into Ethereum, using Ethereum. And so Ethereum, the way I like to think about it, is kind of like a technology company that's making a lot of our current systems cheaper, faster, and more transparent. Now, it's not the cheapest option within the crypto world, but it's considered the kind of stalwart within the cryptocurrency world. So when you hear things are being coined, JP Morgan Chase is creating their own coin. Amazon is creating their own coin. Most of those are using Ethereum and putting that on Ethereum is kind of how they say it. So again, because it's on the blockchain, it can be sent faster from wallet to wallet. It can be sent cheaper than transaction fees charged by most banks or by Visa and MasterCard. And it can be more transparent because it's on the chain. You can follow it, and there's people who are watching that. So that's the biggest, again, not up hugely on the year, but in the month, rocketed up. Number two would be reignited tariff talks. Now, this was more towards the end of the month, but the halt that was in place has come off. We're dealing with some of that. It's causing some volatility within the overall market. However, the market's up around 8% this year. We've completely rebounded from April, where we were down over 20%. A lot of the market is pricing in that negotiations will probably go how they happened in April. That's number two. Number three is the fact that money is trying to find a home right now. Look at these charts. Everything, and I pretty much mean everything, is up and to the right. You've got gold, you've got silver, you've got Bitcoin, you've got Ethereum, you've got our stocks, you've got global stocks. Money markets are still sitting right around 4% plus. Everything is kind of going. So what happens in that, in this situation, is that people tend to get more speculative. They're trying to make money faster. And so they're not just happy with up 20% on a year or up 30%. They're trying to go even more speculative, get even more leverage. So the point I want to make to you guys is we need to be knowledgeable of that, but we can't let that freak us out. We don't want to go, oh, okay, everybody's getting frothy. I want to get out with my money. No. That would be the wrong decision to make right now. We want to be knowledgeable of it. We want to remember that we are investing for the long term. So we can weather whatever. We can weather when things are going up like they are right now. We can weather when things are going down, like what will happen sometime in the near future. But a lot of it is still driven by AI speculation and those sorts of things. So it's just something to keep in mind. So if we can make a planned change, again, we went through April or we went through a downstroke back a couple of years and we say, okay, now is the time to change around, maybe take a little bit of risk off, and we know more about ourselves as investors, or something has changed for us as investors. Okay, great. Let's make that plan change. But again, let's not call a top. Let's not say, great, everybody else is fools. I'm saying we're getting out now. Let's not do that. Let's not make drastic changes with especially our risk on part of our portfolio. That's about it for July. As we look towards the rest of the year, there's still a lot to unpack from the big, beautiful bill and the fact that passed. There is a lot in there. It's an unfortunate part of our political system right now. You can't just get one thing passed. You have to get 20 things passed. So us as a firm, we're still unpacking that, and we will give you insights as best we can. We're getting to the second half of the year. We're in the second half of the year, I should say. And the one note is let's make sure that we have our RMDs out for those where that makes sense. So that's inherited accounts or those over 72 who have already dealt with RMDs. Let's make sure that is done. As we look at the rest of the year, things still look good. We want to be mindful of the speculative nature of most things. We might take a couple of wins off the table and reposition into more, like an S&P 500 or a QQQ or something like that. But there is just not much to do, in our opinion, not much to do outside of keep putting money in and keep riding with the wave. Thanks so much for watching this, and I look forward to seeing you guys in August.